Good morning, everyone. Get ready for today's news update as we dive into today's top stories involving Bitcoin, Ethereum, XRP, Solana, and more. Let's get started. 1. Coinbase and Shopify partnership. Major news: e-commerce giant Shopify partners with Coinbase to bring USDC payments. Here are the key details. Starting June 2025, Shopify will enable USDC payments for online stores in the US. Expanding beyond crypto payments offered since 2020, merchants can accept USDC at checkout using Coinbase Commerce, potentially opening doors for wider crypto adoption. Consumers can pay with USDC via credit cards or bank accounts without direct crypto wallets. Coinbase sees this as a significant step towards mainstream crypto adoption and making it easier for merchants and consumers to transact using digital assets. What are your thoughts on this development? And if you want more updates, don't forget to hit the subscribe button. 2. US President's crypto announcement. The US President is making notable moves regarding cryptocurrencies. Recent developments indicate his support for establishing a Bitcoin reserve, and also mentioned potential recognition of other digital assets. The official announcement has sparked extensive discussion across various channels and platforms. So let's break down some crucial points from the event. First and foremost, the president's decision to focus on Bitcoin rather than including altcoins has raised eyebrows and questions within the crypto community. This has sparked debate about whether this move is driven by a desire to limit the scope of digital assets under consideration, or whether there is a genuine belief that Bitcoin is superior to other cryptocurrencies. This perspective is shared by many in the traditional finance industry, who have long viewed Bitcoin as the most established and trustworthy cryptocurrency due to its market dominance and technological advancements. However, proponents of altcoins argue that excluding them from the president's initiative is short-sighted and could hinder innovation and growth within the broader crypto market. They emphasize that altcoins offer unique features and functionalities that cater to diverse needs and use cases beyond what Bitcoin can provide. For instance, altcoins such as Ethereum, Cardano, and Solana have introduced smart contract capabilities, enabling the creation of decentralized applications and innovative financial products. Others like Polkadot and Cosmos have focused on improving scalability and interoperability, addressing some of the key challenges faced by blockchain networks. The debate surrounding Bitcoin's prominence in the president's crypto-related efforts extends to the potential implications for regulation and adoption. Some argue that by focusing primarily on Bitcoin, regulators may inadvertently stifle innovation and economic growth within the crypto industry. They contend that a more inclusive approach that considers a range of digital assets could foster competition, drive down costs, and provide consumers with greater choice and flexibility. Moreover, critics of the president's decision question whether it reflects a lack of understanding or appreciation for the broader crypto ecosystem. They point out that Bitcoin was not the first cryptocurrency, and it may not necessarily represent the cutting-edge advancements and potential of the industry. According to estimates by Bitwise Asset Management, the president's crypto-related efforts, including the launch of the Bitcoin Future Act and executive orders on digital asset regulation, have resulted in over $57 million in revenue, highlighting the growing significance of the crypto industry and its potential impact on the economy. Despite these criticisms and questions, supporters of the president's approach argue that starting with Bitcoin as the most established cryptocurrency is a pragmatic and risk-averse approach. They contend that by laying a solid foundation with Bitcoin, the government can gradually expand its efforts to include other digital assets as the industry matures and becomes more stable. Additionally, they highlight the need for careful consideration and regulation to mitigate risks associated with emerging technologies and protect consumers. 3. BlackRock's move on Ethereum. In a surprising turn of events, Bloomberg reports that BlackRock has launched an Ethereum ETF, marking a significant shift after previously focusing on Bitcoin. This move underscores the growing institutional interest in Ethereum and its potential as a store of value and investment asset. The fund, officially named the issuer's USD Enhanced Short-Term Treasury ETF, provides investors with exposure to a portfolio of short-term US Treasuries and cash equivalents. Notably, the fund's holdings include Ethereum, accounting for approximately 15% of the total assets. This allocation highlights the increasing confidence and acceptance of Ethereum within the traditional finance world. The decision to incorporate Ethereum into their ETF offerings showcases BlackRock's recognition of Ethereum's growing significance in the cryptocurrency market. As one of the largest asset managers globally, BlackRock's move is expected to pave the way for more financial institutions to explore and integrate Ethereum into their investment strategies. This development follows closely on the heels of recent news that the United States has approved the first physically backed Bitcoin ETFs. The inclusion of Ethereum and BlackRock's latest fund offering also comes amid growing interest from institutional investors seeking to gain exposure to the cryptocurrency market. As more traditional finance players recognize the potential benefits of digital assets, we may see further adoption and integration of cryptocurrencies into mainstream investment portfolios. What do you guys think about this? Let us know in the comments below. And if you're interested in more news, make sure to subscribe. For spot ETFs for altcoins, spot ETFs for assets like Solana and XRP are in the works and awaiting regulatory approval, signaling increased legitimacy and stability for altcoins. While the crypto market has seen significant growth in recent years, the introduction of spot ETFs specifically designed for Solana and XRP represents a major step forward for these altcoins. ETFs, or exchange-traded funds, have become popular investment vehicles in traditional finance, allowing investors to gain exposure to a range of assets in a single investment. The development of spot ETFs for Solana and XRP demonstrates the growing recognition of these altcoins as legitimate investment options. One major benefit of spot ETFs is their ability to provide investors with instant liquidity, meaning that investors can buy or sell shares of the ETF on the stock market at any time during trading hours. This contrasts with other investment options such as index funds, which typically have lockup periods, limiting when investors can access their money. Furthermore, spot ETFs offer diversification benefits as they typically hold a range of assets rather than just one cryptocurrency. This diversification can help mitigate risk and provide investors with a more stable investment portfolio. With the development of spot ETFs for Solana and XRP nearing completion, it is anticipated that they will soon be available for investors to trade on major exchanges. The approval and launch of these ETFs are expected to bring increased liquidity and price stability to both Solana and XRP, making them more attractive investment options for both retail and institutional investors. However, it is important to note that the approval process for spot ETFs can be lengthy and subject to regulatory scrutiny. Nevertheless, the progress made in developing these ETFs for Solana and XRP is a positive indicator of the growing acceptance and maturity of the cryptocurrency market. As more altcoins gain recognition and attract investment, the overall market capitalization and value of cryptocurrencies are likely to increase. It remains to be seen whether other altcoins, such as Cardano, Polkadot, or Chainlink will be next in line to receive the same treatment. But one thing is for sure, the future of crypto looks bright. 5. XRP and Solana strategic reserves. The United States has made an official announcement about exploring the addition of XRP and Solana to government strategic reserves, but it seems that Bitcoin is the only one that has been confirmed so far. Even though no final decisions have been made, this news has sparked a lot of interest and questions from people in the crypto community. This announcement came as a surprise because up until now, Bitcoin was the only cryptocurrency that had been added to the country's official reserves. The main purpose of adding these digital assets to the reserves is to help ensure the smooth functioning of the financial system. However, the recent proposal has left many wondering why XRP and Solana were chosen and what it means for the future of crypto adoption. There is speculation that the decision to include XRP and Solana may be driven by several factors. One possible reason is that these altcoins have demonstrated strong performance and growth potential, attracting significant attention from investors and developers. XRP, known for its fast transaction speeds and low fees, has been widely used in the crypto space as a bridge currency. Meanwhile, Solana has gained popularity for its high performance, scalability, and smart contract capabilities. Another factor to consider is the unique technology and innovative features offered by XRP and Solana. XRP's unique consensus mechanism and decentralized nature may provide advantages in terms of efficiency and security. Similarly, Solana's proof-of-history consensus model and high transaction throughput make it an appealing option for developers building decentralized applications. However, it is important to note that no final decisions have been made, and the process is likely to involve extensive research, analysis, and public discussion. There are several steps involved in adding a new asset to the country's reserves. One of the initial steps includes conducting a comprehensive assessment of the asset's characteristics, market performance, and potential risks. This evaluation will help determine its suitability for inclusion in the reserves. Following the assessment phase, there will likely be consultations with relevant stakeholders, including financial institutions, industry experts, and policymakers. These consultations will gather insights and perspectives to inform the decision-making process. Ultimately, any decision to add XRP and Solana to the government as reserves will require careful consideration of the potential benefits, risks, and broader implications for the financial system. The crypto community will continue to monitor these developments closely as they may have significant implications for the future of crypto adoption and regulation. 6. Chainlink, Ondo JPMorgan. In a significant milestone for tokenized finance, a partnership between Chainlink, Ondo, and JPMorgan has successfully completed a cross-chain settlement, demonstrating the growing interoperability and utility of blockchain technology. This achievement marks a crucial step forward in bridging traditional finance and the crypto world. The cross-chain settlement involved transferring tokenized assets from one blockchain network to another, showcasing the flexibility and adaptability of the blockchain-based solution. One of the key aspects of this milestone is the collaboration between established players like JPMorgan and innovative blockchain startups like Chainlink and Ondo. This partnership highlights the growing recognition and acceptance of blockchain technology within the traditional finance industry. By working together, these companies are driving the adoption and integration of crypto assets into mainstream financial systems. 7. Cardano, Algorand Sei. While Cardano and Algorand continue to demonstrate gradual growth, Sei has emerged as a high-performance blockchain gaining attention for its speed and scalability. Each of these blockchains has its own unique features and development plans. Cardano and Algorand are both public blockchains that support smart contracts and decentralized applications. They have been making steady progress in terms of ecosystem growth and user adoption. Cardano has seen an increase in the number of projects and applications being built on its network. Its recent upgrade, Vasil Hard Fork, has improved network scalability and efficiency. Algorand, on the other hand, has been focusing on partnerships and integrations with major players in the finance industry. Its unique consensus mechanism and compatibility with other blockchain networks have made it an attractive platform for developers. Meanwhile, Sei has been gaining traction as a Layer 1 blockchain with a strong emphasis on speed and scalability. It uses a unique consensus mechanism called proof of stake and history to achieve high transaction throughput. Sei's development team has also been working on initiatives to promote the growth of the Sei ecosystem, including providing grants to developers and supporting the creation of decentralized applications. Each of these blockchains offers a different approach to solving the challenges of blockchain technology. Cardano and Algorand prioritize security and decentralization, while Sei focuses on speed and scalability. The choice of which blockchain to use depends on the specific requirements and priorities of the project or application being built. Regardless of their differences, these blockchains are all contributing to the growth and development of the broader blockchain and crypto industry. And that's all for today's news update. We hope you enjoyed the video and learned something new. If you're interested in more news updates, please subscribe. Thanks for watching, and we'll see you in the next one.